Good evening and welcome to SAP Business 1 class, and we'll begin shortly. Thank you. Thank you for joining in. Good evening. Good evening, Manoj. Good evening, Nitin. Good evening, Ajit. Good evening, Vikas. Good evening, Abhay. Good evening, Rakesh. Good evening, Shivam. Good evening, everyone. Thank you for joining the session, and we'll begin shortly. Okay. Thank you, everyone. Thank you, Ram Bahadur. Thank you, Suresh. Thank you, everyone. And thank you for joining in. And we'll begin shortly. Couple of minutes, 2 minutes, and we'll start the class. Thank you so much. Thank you, Sunny. Good evening, Anil Rana. We appreciate your joining the session. Thirty more seconds. In 30 seconds, we're going to start the class. Okay. Thank you all. Good evening, Suresh. Good evening, Aman Bhatnagar. I hope all you can hear my voice. So for the people who are probably new, there is an audio option, and that audio option is called computer audio, and we can join using computer audio, and also you can hear my voice. Make sure you are able to hear my voice clearly. There is a chat box. So if you have any questions, etc., then you can type your question. Okay. So thank you, everyone. Thank you for joining the session. Okay, so let us begin. So what we will be discussing, you are audible now. I was facing some technical difficulty. Thank you, Suresh. And now today we're going to talk about purchasing items. Okay. In the purchasing item, we will discuss about various purchasing functions. So in this, how does the different purchasing function works? So we will be discussing and talking about this. Now, before I move forward, do you have any questions, concerns, whatever we have covered so far? So please let me know. I will be more than happy to talk to you and clarify if you have any questions. Anyone else? Okay. So assuming there is no question, we will continue. We'll talk about purchasing. So today's agenda is about purchasing, in which we'll discuss the different purchasing functions and the purchasing process. We discussed some part of that before. We will take it forward. So that is what we will be discussing today. So purchasing process. So what are the purchasing process steps? What are the process steps end-to-end in the purchasing cycle? In SAP, we'll talk about that. And another thing is, what are the consequences? We discussed that before, and we'll discuss more. When we do purchasing cycle, what are the consequences of the purchasing cycle? So when we talk about the purchase cycle, so what we have, we discussed that before also, and this is in a way is a repeat. So process can start with the purchase order. Process can start with the good receipt, that is the second step. Then there is a account payable invoice. And then we have outgoing payment. So these are 4 process steps. Purchase order, good receipt against purchase order. And after the good receipt, we make a payment to the supplier. And then we do outgoing payment. So this is the whole end-to-end purchasing cycle. This is the purchasing cycle. Purchase order, we created last week. We're going to create purchase order again. We're going to create good receipt against purchase order. We did that before. We will do this again. Then after that, we're going to do vendor invoice. And we're going to make outgoing payments. So whole process step consists of these 4 process steps: purchase order, good receipt against purchase order, then vendor submit invoice, and then we make a payment to the supplier. 4-step process. Now, purchase order. What is a purchase order? Now, if you look at it, which I highlighted, it is a commercial document. So pay attention to that word called commercial document. Commercial document basically means it's a legal document between a buyer and seller. Purchase order has legal meaning. It's a commitment between a buyer and a seller. You have terms, you have conditions, you have price. And that is why purchase order has a commercial document, is a legal document between a buyer and seller. Another thing is, when you're doing purchase order, there is no accounting change. So purchase order does not change anything in the finance. Because having a PO doesn't change my accounting. It's a commitment. Once next step happen, it might be, but as of now, it doesn't affect my accounting at all. So it does not affect my accounting. So what are the effects of purchase order? So purchase order, if you see here, inventory reports as ordered. I want to do an exercise. So I want to do an exercise. In this exercise, what I want to do, I want to purchase cycle exercise. In that, I want to create a simple material. So I want to create a material. Then I want to verify inventory overview. Then I want to create a purchase order. Then I want to verify inventory overview. Now let's see what happens with that. And this is a very interesting factor, and that is why a true ERP will do. So purchase cycle. Let me do this quickly. So let's say I create a material, I log into SAP system, and I go to inventory, I go to item master data, and then in the item master data, this is item master data, and I hit Control A. Control A basically means I can do a new entry, so it opens up now. And what kind of item it is, you can have a different item groups. We'll talk about those more. Finished good, what kind of item, sample, server, service, storage, transformer, whatever. You can choose. FG means finished good. And I'm entering an item called FIG002. I think 002 we did, so 003. And this is, we are creating automotive component. So we are buying an automotive component. Now in the automotive component, I go to purchasing. I can enter, I'm entering a very small data. We'll talk about more. There are a lot of other fields we are not even discussing right now. But some point of time, we're going to discuss all these different fields. But we are entering some very basic minimal data. What is the meaning of all these different fields is we have not yet discussed. We created a simple material. See the message in the bottom. FIG003 created. Okay. So now I created a material, and that material is called FIG003. Okay. Now I want to verify the inventory for this item. So now I want to go back. I cancel. I go to item master data. Then I select the item. And then I want to go and select that item FIG003. FIG003. So this is, we can put a find button, multiple find option. So this is the item master, FIG003. Now if I go to inventory data, now look at carefully here. Because this is the new item, so in stock is 0, committed is 0, ordered is 0, available is 0. Okay? 0, 0, 0, 0. Everything is 0. Look at carefully here. In SAP 2 department 1 for create document on the purchasing. Yeah, of course. There is approval and of everything. Yes. So we have, look at carefully here. So this is the material I created, FIG automatic component, stock 0, nothing is there. Committed, nothing is there. Ordered, nothing is there. Available, nothing is there. Everything is blank. We close this. Now, what happens is, we have something called inventory repo. I want to create a purchase order. So we can create a purchase order. Yeah, we'll talk about all this valuation method and all that. We have a whole topic left on valuation topic. Valuation. We have a full topic on valuation. Okay. So we have full topic on the valuation. Yeah. And then somebody was asking approval and all that. So in SAP, there's whole approval process and all that. In SAP, you can approve different documents. Because creating purchase order, then somebody can approve all these purchasing documents, sales document, inventory document, and all that. So there's whole approval process. Okay. Now I want to create purchase order. So I go back. I want to create a purchase order. I select my vendor. And I select any of my vendors, which you corrected. I enter my item, which is FIG003. This is my item, automotive component 3. Quantity, let us say 10 pieces. Price is $200. So I'm entering a purchase order with this vendor for this item, for this quantity, and for price $200. And we save it. So see the message at the bottom, operation completed successfully. So operation completed successfully. Now what happens? We create a PO. Now after PO, what happens? After PO, we go back to the inventory here. So if you go to inventory here, FIG003, and if you go to inventory data here, now do you see any difference? Do you see any difference? Do you see any difference? What changed? After PO, what happened on inventory? Overview. So what happened on inventory overview? What is the impact on inventory overview? You guys see any difference? So the difference here is, now the ordered quantity become 10. So system automatically knows ordered quantity has become 10. So now the accounting people know that this material 10 pieces has been ordered. So 10 pieces has been ordered. Available is 10 pieces. And that is what we see here. So a stock, nothing. Committed, nothing. Ordered, 10. Available, 10. So the moment you create a purchase order, it updates my ordered quantity. Now, and that is what we see here. Inventory report as ordered. Available stock increases. This is the power of integration. This is the power when your purchasing is updated automatically to other departments and other functions. How the inventory will know that you have a PO for it. They will see inventory report and they say it is ordered. So this is the effect of purchase order. We need to check item is available or not. Yes, there is ATP check in SAP. Addresses in purchase order. In the purchase order, in the logistic tab, we have addresses. Now, what are those addresses? So we go back to the purchase order. This is my purchase order. Keep looking at, and here we have a logistic. Now here we have a ship to address and pay to address. So here we have a ship to address and pay to address. Ship to address is company or warehouse. The ship to address is coming from where the product supplier will be shipping. So this is my company's address. So company, the product will be delivered in Nehru Place, New Delhi. Then we have pay to address. Pay to address comes from supplier. So who is the supplier? And in case of supplier, this is the address of the supplier. So there is a ship to address and pay to address. That is what we see as ship to address and pay to address. Then the next step is to do the good receipt against purchase order. Now, you can create, this is called G, good receipt against PO. When we create a GRPO, you can create directly from the purchase order. If you see here, look at my screen carefully. In the bottom, you see the purchase order. In bottom, we have something called copy to. Copy to in the bottom. Copy to means who is my target document. So I can do a good receipt from here. GRPO. Copy to. Now there is another option. So if I close this, if I go to purchasing, if I go to GRPO, and here if I put my vendor, and I can select my vendor, then I have a copy from. See, look at here. Copy to, copy from. In the copy from, I select, let us say, my purchase order. I want to select my purchase orders. These are all my purchase orders. This is the one we created today, 928. We select it, we choose. We go to next. We go to finish. So what happened? My good receipt has been copied. My PO has been copied into good receipt. Okay. So we are able to copy in this. A2 means vendor. So here, ship to means where the product is coming to. So this is my company's warehouse, my warehouse location. A2 means where I'm going to send the money, which is vendor's address. So now, what is the effect of good receipt? Now we got a material in stock. Now let's check it. So this is my good receipt against PO. This is my vendor. This is my item, FIG003, quantity 10. This is the price. And now everything looks fine. And then here we can add. and say yes. So see the message in the bottom, operation completed successfully. Now, after that, I want to go to the material. I want to go to material. Same tab. Now, do you see any difference? Now you see any difference? Now you see any difference? Any difference you see from the last time? What has impact? Stock has been updated. Now the material after the receipt, material has come into stock. Ordered quantity is blanked out. So it's no more ordered. It's blank out. Now the material is in stock. That is the impact on the inventory. Good receipt means material has arrived. We have receipt. At the good receipt, material has arrived, receipt in my stock. So if you see here, it is in stock now. We have received it. It is in my warehouse. It's a good receipt. Now there is a copy to and copy from. We looked at it. We did both. So if you go back, if I close it, so we have two options here. If you look at it, copy to, copy from. Copy from if I want to create a next document. Copy from if I want to refer my previous document. So we see here in the bottom, we have two options, copy from and copy to. Okay, so copy from and copy to. So that is what we have a copy from and copy to. We have used. So copy to if I'm doing any future document or next document. Copy from if I wanted to select my previous document. So here we have copy from, copy to. I have an option of working in either way. Copy to and copy from. There is something called open item list. Open item list is a report. You see that open item list. Now where is open item list? So I close this, and if you look at my screen, I go to purchase order, and here I have an open item list. So this is my open item list. Okay, so we have open item list. Okay, if I go to open item list, in the open item, see this window comes up. In open item, this window appears. I want to see my open transactions. So I want to see my open sales orders. There are so many open sales orders. I want to see my open sales quotations. These are my open sales quotations. I want to see my open purchase orders. These are my open purchase orders. I want to see my open purchase requests. These are my open purchase. Now this open item list is an important report. It's a report because this report gives me what kind of documents are open and the document on which we have not yet did any further functions. So that is where the open item list come into the picture, and that is why this list and this document is important for us. Okay, so that is where we use this document. Okay, so we have a open item list in which you can see open purchase request. We can see production order. I want to see open production order. You can see all of that. So this is it. We looked at it. open item list. Open item list is a report which gives you a list of open sales orders, open purchase orders, open quotations, open this, open that, because you have all these different transactions. You see all these different transactions which are there in the open list. So you can get all these different open list which you can get. See that all these different items. This is open item list. Now the next thing is, what is the effect of good receipt against purchase order? Okay. So what is the effect of the good receipt on the purchase order? That is what we are talking about. There are few things. Inventory post a general entry. You see that here? Pay attention to this. This is important. So when I do a good receipt, behind the scene, system create a general entry. This is important. What is that general entry? This is my good receipt. I right click on it, and there is a general entry. Now we are integrating to finance. This is the true power of any global ERP. Understand the power. Understand these integration points. We did a good receipt, update my stock, update my open quantity, my finance, my purchasing, my inventory, various functions are simultaneously getting updated. If people use any global ERP, having those integration points is the power of a true ERP in the world. So here we have, see the general entry. So this is general entry. Okay, this is the general entry which we see in the system. Now look at this general entry very carefully. What is this general entry basically means? Okay. What is this basically means for us? Look at this entry. Look at these integration points. These integration points are important. These integration points are very, very important. We talked about this before, and we are discussing this again. How my finance is getting updated in the real time. That's immensely powerful. Now let's understand this. So if we see here, my stock account is debited. My GIR killing account is credited. So we created a good receipt against PO. And then we verify inventory overview. Okay. And then we can check general entry. In the journal entry, what is a journal entry? So journal entry, debit my stock account, because the stock has arrived, so it is my stock account. Credit my GRIR clearing account. This is just a clearing account. This second account has no meaning except that it's a clearing account, because in the finance, something you credit, something you have to debit. So this account is debited, and then this account is credited. So credit and the debit. Okay. Make a note of these entries. These entries are important. These entries are important. Okay. That is the effect. We saw that in a stock, committed, ordered, available. These are the 4 dimensions of inventory in the SAP. These are the 4 dimensions. Look at here again. Stock, committed, ordered, available. Where it is. So we close this. Okay. A little bit better. So we come back here. I go to my item. I go to my inventory data. And here we have a in stock, committed, ordered, available. 1 dimension, 2 dimension, 3 dimension, 4 dimension. These are the 4-dimensional view of inventory. Now in my stock, I have 100 committed. Committed basically means if I have a sales order, that is commitment. Ordered, and we're going to create sales cycle. We have not created sales cycle yet. So commitment comes from sales. Ordered is coming from purchasing. Available, how much stock we have. That is available. That is what we see here. Invoice is not prepared. We have not done invoice, right? Aman, just don't keep asking questions. Aman Bhatnagar, calm down. You're asking very obvious questions because that disrupts the class. Yeah. We are going to the flow. Focus on what I'm talking at this moment. Yeah. Committed is what is there on the sales. So that is committed. So committed basically means if I have any sales against, like for example, if I have a sales order, that is called committed. Now we go to the AP invoice. Somebody was asking AP invoice. You have to calm down because there is a flow, right? So just focus on that point, because if you're not focused on what I'm teaching but focus other things, then you will lose both. I'm going through the level 3. This is the training material. This material is SAP's training material, level 3 training material. Nothing goes beyond it. So everything will be covered. We talked about that before also. So all the things in the entire SAP would be covered. So, but a lot of things will come. As I mentioned in the last class, we only use the 92 pages. We have 900 pages to cover and more. Okay, so now we go to AP invoice. AP invoice. AP invoice basically means my vendor invoice. Then we have something called AP invoice triggers a payment to the vendor. AP invoice is what? AP means account payable. So AP basically means vendor invoice. Vendor invoice basically means after supplying the material, vendor tells me, okay, this is my invoice, pay me. You have to pay to a supplier. So that is where we have AP invoice. Now, how do we do AP invoice? So I close this. So this is the good receipt. This is GRPO. Now look at my screen in the bottom. Look at carefully. So here we have a copy to. So last time we used copy from. This time we are using copy to. So here we have a copy to. So we are copying to. So system tells me you have three choices. Excise invoice is obsolete. It's nobody use in India. It's the GST now. So here we have AP invoice. You see that here, AP invoice. So we go there. There is AP invoice. Then we select text code. We hit enter. And then we go to item overview. And then we save. So what we did, we create AP invoice. What we have done so far, we go to relationship map. This is what we have done. This is the vendor, Acme Associated. This is the purchase order, 617. This is my Kurusian case purchase order, 623. This is my AP invoice, 535. Okay. This is my AP invoice, and this document is open. So this document is open. So purchase order, Kurusian case purchase order, and account payable. That is what we see here. So AP invoice also have a journal entry. You see that here? AP invoice, account payable invoice is the basis for the payment to the vendor. How much you will pay? How much you will pay? You will pay as per your invoice. So whatever your invoice amount is, as per that invoice, you will pay. So you will pay as per invoice. So that is what it says, basis for payment. So if I come back here, if you look at it here, so if I have my invoice for $200 per unit 10, so it's a $2,000. So we are now responsible for paying $2,000 to the customer, to the supplier, not customer. Basis for the payment. Now another thing, effect. Wherever you have effect, that is important. So what is the effect of AP invoice? So in the effect, we saw at the time of good receipt, there is a general entry. At the time of account payable, there is also an entry. So in the time of good receipt, quantity increases, general entry happened. We saw that. There are two things. This is increase in quantity, this is increase in value. At the time of payment, effect of the account payable, look at my screen carefully. This is my account payable. I click, right click. Then I go to journal entry. And in the journal entry, again, we are integrating to the finance. This is important. Now, what we see here, my supplier, Acme Associates, is credited by $2,000, 2,080. $80 is a tax. So my tax debited. GIA account debited. Vendor credited. This is important entry. So make a note of these things. So at that time of vendor invoice, or it is also called AP invoice, is the same words. So we have something called journal entry. In the journal entry, we have followed credit. Make a note of this, please, because these entry, understanding these integration points is the important part. As I mentioned to you last time, if somebody doing your interview tomorrow, if you're writing a certification examination, these are the entries and integration points somebody will focus. So these are the important points, because this is what will be somebody will be asking you. Okay, these are the posting. This is the real-time posting. This is another journal entry. This is another journal entry. This is credit. This is debit. Make a note of that. Can we convert currency directly in SAP? Yes, you can do. You can maintain currency. You can do currency conversion. Committed basically means if you have a sales order. If you have a sales order, that quantity in the sales order is called committed quantity. You got the point? Committed quantity means quantity for which we have a sales order. That is called committed quantity. You can maintain multiple currency. You can do currency conversions also. You can enter the exchange rate and all that also. Okay. So this is the process. This is what we've done so far. Okay. And now we close this. Then the next thing is the payment. And look at the word here. Look at the word carefully. Outgoing payment. Outgoing payments. Outgoing payment basically means how we're going to make a payment to the supplier. That's why it's called outgoing. In outgoing payment, you can make a payment by cash, by a check, by a credit card, by a bank transfer. There are 4 payment methods. And again, there is a journal entry. So now we want to do the next step, payment processing. How do I make a payment to the supplier? We got invoice. Now we want to make a payment to the supplier. How do we do that? We close this. For that, we go to the banking module. We go to outgoing payments. We go to outgoing payments. We select the supplier we want. Our supplier is this Acme Associates or whatever. You can choose. And then if you look at there is a small icon in the bottom. It's called, if you look at this cursor here, this is called payment means. We click on it. Now here, SAP support 4 payment means. You can pay by a check. You can pay by a bank transfer. You can pay by a credit card. You can pay by a cash. So these are the 4 payment methods which SAP can support. Okay. These are the 4 payment methods which SAP can support. So let's say we're doing the check, which is very common. Okay. So we enter the amount, and if you see here, we have all these different invoices. We can choose the one we want. If you go scroll down, if you scroll down, okay. So if you look at it here, this one we did today, 928. This is today's invoice. This is the amount, 2018. You can choose one, you can choose multiple. If you're clearing which document, which payment you're clearing, and then we go to payment means. We select that, and then we say how much payment we are clearing. We say we're clearing this invoice for $2,080. Rupees, not dollars, rupees. INR. We save it. See the message in the bottom. Operation completed successfully. Wonderful. What happened? We go back and we see that this vendor, Acme Associates, this is a posting document. In this date, we make a payment of 2,080. Now, again, there is a journal entry. This is another very, very important point. Understanding these integration points is the part of the core learning. If you want to become the SAP consultant, successful SAP consultant, you have to understand these integration points. Purchase order, good receipt, invoice, yes, no, this is obvious. But understanding these integration points, which I'm explaining, is the most important part during the interview. When you go interview tomorrow, this is what people will ask you. When you're writing for a certification exam, this is what will be asked during certification exams. Okay? So we can do journal entry. So we go to journal entry here. And again, what is there? A journal entry. So my vendor, Acme Associates, has been debited because we made a payment to him. Then my bank, HDFC Bank, has been credited for 2018. I close it, and if I want to go to relationship map, and I want to see my end-to-end relationship map, what is going on, and this is my relationship map. So we have a business partner, this is my purchase order, this is purchase order number, this is a grocery engaged purchase order, this is my AP invoice, 535, and this is my outgoing payment. This is my end-to-end cycle. Now, if you look at it here, if I make outgoing payment, so in outgoing payment also, there is a journal entry. Make a note of this journal entry. And what is that journal entry? So journal entry is debit my vendor account, make a note of this, vendor account, and credit my bank. Okay. So this is the entries. So please make a note of these entries. These are the most critical part of learning. Verifying inventory overview. This is important. Verifying inventory overview. This is important. And this is end-to-end purchasing cycle. So this is purchasing cycle. Okay. So this is the payment processing. It is credit my bank, and it debits my vendor's account. That is what happened with the payment processing. So we did the purchasing overview. So let's do purchasing overview. So we do a purchase order, that is a starting point. Purchase order is a document between the buyer and seller. It represents a commitment, is a legal document, is a formal document, and purchase order do not have any impact on accounting. It does not affect accounting. Then when we do good receipt, GRPO, then we saw at the time GRPO, it updates my stock and it also updates my general ledger. There is a general entry. Okay, both. Then when I do the AP invoice or vendor invoice, then I have a warehouse and it updates my warehouse, and again there is a general entry. We saw that general entry. See the general ledger. This is the general ledger, because at the time of GRPO there is a general entry. At the time of AP invoice there is a general entry. And what are those general entry? This is general entry at the time of GRPO. This is general entry at the time of vendor invoice. These are the general entry at the time of outgoing payments. Okay, so that is what we see in the purchasing review. Summary. So we discuss that. Now we go to the next topic. So can we do outgoing payment for 2 AP invoice in one document? Yes, you can do that. You can choose. You can choose them. Yes. You can choose multiple documents. You can choose multiple documents. I select one document for Killary. If you want to select more than one document, you can select more than one document also. Yes, you can always do that. Okay. Now we go to the good issue with some other topic. Some additional functions. Receiving incorrect deliveries from the vendor. Possible.
That may be beyond.
Okay. We might have received the incorrect deliveries. Possible. So how do we handle those? Can I pay advance? Yes, we can pay advance also. There is an advance functionality in SAP. So receiving incorrect deliveries from the vendor. What we can do? There are many things possible. Supplier only delivered a partial quantity. Possible. I ordered 10. I got 5. Possible. Supplier do over delivery. That is also possible. That supplier has in case of that, supplier can also supply more. Okay. So supplier can supply less, and supplier can also supply more. Supplier can do both. It's possible that I have in PO, I have 10 pieces, and then my supplier supplied me 12, or vice versa. So you can do under delivery, you can do over delivery, you can do partial, you can do over supply, you give a wrong supply, you can get different material. How do we handle them? So these are called good receipt issues. What are those issues? Too little quantity. I have a, order 10, I got 7, I got less. It's called under delivery. Too large a quantity. It's also possible. Too large a quantity. Okay. And then we also have something called substituted item. Substituted item basically means I ordered A, customer doesn't have A. And rather than A, they supply me B, which is equivalent to A. So that is an example of substituted supply. See here, over delivery, under delivery, and substitute item. 3 possibilities. So now, if you look at it here, partial delivery. Look at this picture. So I have one purchase order. In this purchase order, I have item A, item B, item C. Then I did a one go receipt for 6 pieces. And I did another go receipt for 4 pieces. So this 10 pieces is supplied in 2 receipts. Possible? So out of 10, first customer gives me 6. And then after some time, customer gives me remaining 4. So that is possible. That is example of partial delivery. Now, another thing here is close the purchase order. Look at this word, close the purchase order. Pay attention to this word. It says close the purchase order. Close the purchase orders. Now, what happens is when you supply the full quantity, PO is closed. So I have a PO for 10 pieces. I supply 10. Then my PO is closed. Or it is also possible that I have a PO for 10. Vendor supplied to me 8. 2 are left. But vendor says, sorry, those 2 I'm not going to supply. Possible. In that case, we can close the purchase order and say, well, remaining quantity vendor is not going to supply. So if once you close the PO, you cannot copy in the system. You close it, but then PO remain in the system, but then it will copy the item as long as it remains open. Once the PO is closed, quantity cannot be copied. Delivery of a larger quantity. I have a, look at here, I have a 15 pieces. And my supplier gives me 20. They give me more. If you want, system gives you flexibility to receive more. You receive less, and you also can receive more. System allows you to receive more than purchase order quantity. So second line item, I have 10 pieces. Customer, the supplier supply me 20 rather than 15, and I can receive 20. I can receive more. It's called delivery of a larger quantity. Substitute item. Another scenario is a substitute item. Now look at it here. So in my PO, I have item A, item B, and item C. But if you go back here, you will see that item A in go receipt item A, item B in the go receipt item B. For the purchase order for item C, vendor gives me item D. C and D are equivalent product. So many times supplier tells me, well, I don't have a C, I want to give you D. And we say, okay, fine. And then we receive that product. So that is an example of receiving a substitute product. You can do that as well. So you can do over delivery, under delivery, substitute product. That all you can do in at the time of good receipt. Okay. Let us do this exercise. So I want to do an exercise, and we call it goods receipt issues. So how do we handle good receipt issues? Under delivery, over delivery, partial delivery, substitute product, etc. So we create PO. So we create a purchase order, transaction code ME20, create a purchase order, and then we create goods receipt. Okay, that's what we're gonna do. Let's do this exercise. Can we pick two different PO for one entry? Yes, we can pick two POs also. So we do a good receipt, and now we close this, we close this, we close this, close this. Now we go to purchase order. So this is the purchase order. So we want to create a purchase order. We select a vendor. This is my vendor, Acme Associates. We select the item. Okay. Now one more thing which I think I forgot to tell you. My apologies. So I think note. So I would request you all that if you can send me your resumes, yeah, for my reference. So at least I should know who I'm talking to. So that way I know you, yeah. So that way I know you. I have your background, and some of you have already sent, but some of you have not. So this is my email address. So you can send it to me. You can send it to Deepti. So that way I have your information at least about you. At least I know your background, your names, your education, your work experience. So with that, that will help me. Okay. I think some of you have already sent, some of you have not. So I would request you can just send your resume. Don't worry about it. It's not updated or whatever. You have it. Whatever you have, send it. It is just for my information, so at least I can go through. Some of you already sent it. Some of you not. Okay. Yeah. You can, when you are sending, you can also copy to me as well. So I also have it. So whatever, that's why I give it to you all these three names. So when you're sending any document, you can send to any of these three, copy all the three. So it's easy that way, but that's fine. If you send to Deepti, it's fine as well. Okay, so good issue receipt. So we create a purchase order. So I select an item. Okay. I select another item. I select another item. just select 3 items. Okay. Okay. So these are 3 items. So I'm selecting, let us say this is 10 pieces. This is 10 pieces. This is 10 pieces. Okay. Now, if you look at it carefully, for this item, price has arrived. This item, price has come. This item, price has not. Price has come. But the material in between, no price came. Okay. No price came automatically. Did you notice that? Now, why this price did not came? Because there is no price list maintained. We will talk about how do we maintain these price list also. Okay. So we go back here in the price list. So I can enter some price lists. And we're going to do this exercise also. So I have a 3 item, item 1, item 2, item 3, 10 pieces, 10 pieces, 10 pieces, and these are their independent prices. And we save it. So we are created, operation completed successfully. We create a purchase order. Okay, that is fine. Yeah. So this is a PO we have created. Okay. Now after creating a PO, now in the bottom we have a good receipt against purchase of copy 2. Look at here, copy 2. So now everything gets copied from PO into good receipt. Item 1, item 2, item 3. Quantity 10, quantity 10, quantity 10. Whatever price we entered. Okay. Now, how much we really receipt? So it is possible for this item, rather than 10, we got 12. We got more pieces. For this item, rather than 10, I received 7. And it's possible for this item, RW001, rather than RW001, they get me RW002. So this is oversupply, undersupply, substituted item. And we save it. And we save it. Now what happened? We have a purchase order, and then we have a good receipt against purchase order. If I want to go to purchase order, now if you see here, these 2 items are still open. You see that here? The first line is dark because this is supplied, completely gone, done. But these 2 items are still remain because this was undersupplied. See here, open quantity 3. Because I have 10, I got 7, I left 3. This item was substituted. So this item is considered as if it is not delivered. So open quantity of this PO remain 10, although I got item D, different item. Now, if I want another good receipt, there are 2 possibilities when vendor say, yeah, I'm going to supply you the remaining pieces. Then we can do another good receipt. Or vendor say, I'm not going to supply. Then we can close. Close basically means This item is there in the PO, vendor will not supply. They have a bankruptcy, their factory closed, there's a fire, something happened. Remaining item will not be supplied, so we can close. Or we can receive again. My vendor is supplying again, so we receive again. And then whatever the remaining quantity, 10 pieces, it copies. This item was not supplied because we given another product and we accepted it. And we say yes and yes. Now, if I go to relationship map, this is the relationship map. I have one purchase order, 618 on this date. This is the amount. I did one good receipt, 624. I did another good receipt, 625. I did two good receipts. And now, after this, if I want to go this item, and if I say copy to, this copy to button is gray out. This copy to button is gray out because now customer will not, the supplier will not supply. After this, the entire quantity is considered as delivered. So now, system will not supply remaining quantity. It's all closed. So what we did an example. We close all this. With too many windows, we close all this. So what we did under delivery, we did over delivery, we did different item, and we also did 2 GR for 1 PO. Okay. This is some of the exercise which you have done. Now we go to the next situation and scenario. This is called goods returns and credit memo. Good returns. Good return basically means I receive the material, something is wrong with it, we didn't find it okay, we return it. Credit memo basically means if I made a payment to a supplier, we already invoiced, I want to take the money back. So good return and credit memo. Now what is that basically means? Let's understand this scenario. So in this subject or in this unit, we're going to talk about good return and credit memo. So what is good return? How do we do that? How do we do credit memo? We're going to talk about that. There is also something called good return request. Now pay attention. So there is a good return and there is another thing called good return request. Two different documents. We cannot use them interchangeably. Okay. Why? Oh, okay, sorry. So here we have a, let me make it a little bit more larger. So here we have a good return and credit memo. And another one we have good return request. Two different functions. Okay. If vendor has supplied the material, if material is not right, is defective, is damaged, poor quality or whatever, we can always return the material back to the supplier. And that is called good return. You can do credit also. You have done invoicing, and after that, you want to do credits. You want to take the money back. You might have already invoiced. In such cases and others, we can do credit. So, good return and the credit memo. So, I've done the good receipt against purchase order. I've done GRPO. I've done the good receipt. And the moment I do the good receipt, so if we go back to the GRPO, the one which we did last, so this is the GRPO we did. This is the GRPO we did. And see at the bottom here, we have an option of three things. You see that return request, returns, and AP invoice. There is no credit memo here though, by the way. There is no credit memo here. Why there is no credit memo? Because we have not yet invoiced. So we have not paid, we have not acknowledged the invoice because we have not done the invoicing. So no reason to do credit. Only we have done the good receipt. So that is why we have either you can do request or return. Request basically means I'm requesting the supplier that I'm going to return this material to you. Return basically means when I actually do it. So this return request is more like a RMA, return material authorization. So I inform the vendor that I'm going to return. He said, yeah, okay, fine. And I send it back. So the first document is okay, fine. And then when we finally make a return, that is called good return. Once I have done the AP invoice though, then I can do credit memo because I've already done the invoicing as well. I have acknowledged the payment, and then because I have done the invoicing, therefore I can do AP credit memo. That is what this basically means. So we have to simplify the process with a good return, and so we're going to do this process. So let me do this exercise. So look at my screen. So this is the good receipt against PO we did, yeah? So this is GRPO. We have received the material. Something is wrong. So what we can do, we go back here. We go to return request. I want to create a return request first. So this is my good return request. It's like an authorization. I'm asking the permission of the vendor. I don't need to ask permission. I can directly return also. So then you can directly do good return. But if you need permission before you return, then you do good return request. And then here, we have done good return request. After that, see that here, there is a good return. If you again go back to the copy function, let me make this a screen bit on the other side. Copy to, there is a good return. And this is the good return. And then, and I said, what we have done so far. This is what we did. We create a purchase order. We create a good receipt against PO. Then we get a return request. And then we did a return. So what we did, we have done exercise for good return request. Good return request is like a permission. for return. It's like authorization. We are asking vendor, can we return it to you? And he said, yeah, go ahead. Sometimes we don't care about vendor's permission because he's a vendor, we just send him. So you have both choices. You can directly create return also, but you have this document, some company use that as well. And then against that, we create goods returns. So we have done good return where we are actually returning material back to the vendor. Now if you see here, so this is good return. If I double click on this good return, okay, and here if I go to journal entry, it reversed. In my stock account, it's credited now. Pay attention, because material is went out. So now my stock account is credited and GIF link account is debited. So entry are reversed. So whatever entry we had it here, this entry at the time of good return is reversed. So here, credit my stock account and debit my JDR credit account. Reversed. That is what we see here. We close it. This is what we have done. Now we have this another good receipt. Because we have two good receipts. So we go to this good receipt. This is good receipt which we did, and I want to copy to, and I want to do invoice because I did invoicing. Vendor sent me invoice, and then we did invoicing, and I add, and I save. Row without tax, so I enter the tax amount. Okay, and then we add entry and say yes. So now what we did, we create an invoice. Now if I want to see the relationship math, so this is what we have done. So for this good receipt, we have done invoicing. For this return, I have done the return request. Now, there was a problem. I want to do a credit memo. Now we see here, after AP invoice, I can still return here. I've done invoicing. It still doesn't mean that I cannot return. I can still return the material to you even after invoicing. And I can always do a credit memo also. That, sorry, we acknowledge your invoice in a mistake. So we can directly go to credit memo here. So this is AP credit memo. And then we select credit memo. Okay. What we have done so far. This is what we have done. So we have purchase order. We get one good receipt. The second good receipt. Against this good receipt, I did invoice also. But then you find out there's some problem. Then I did a credit memo. I send it back. I got my money also back. Here, in this case, I have a purchase order, and we did good receipt against purchase order. Then at the time of good receipt itself, I find out something is not right with this material. So at the time of good receipt itself, I find out something is not right. And then we can have good return request, and then we have a good return. So all these different documents you can do. We had a good return, and we also done credit memo to the vendor. So we did a PO, we did a GRPO, we did an invoicing, we did outgoing payment, we do under delivery, outer delivery, partial delivery, substitute item, good return request, good return, credit memo. All those different scenarios of the purchasing cycle we have done. I have a good news. I have a good news. The loss is over. Samachar समाप्त हुए. We'll talk tomorrow. We will talk tomorrow. Thank you all. If you don't have a training material, talk to Deepti. If you don't have the videos, talk to Deepti. She will provide it. And we go from there. Okay. Thank you very much. So thank you all. And talk to you. And thank you. Class is over. Thank you all. Bye guys. Take care. Talk to you tomorrow. Same time, same place, same channel. All India Radio.